Tomorrow, baby. Tomorrow is the FOMC meeting. This is huge for the market. So today we came out with our inflation reading. We're going to talk about that, and we're going to talk about what the FOMC is and what we can expect for the markets ahead. In this video, guys, I'll give you an analysis of the markets, explain what's going on so you guys can be better suited for trading and or investing. None of this is financial advice. Keep that in mind. Hit that like, baby, and hit that subscribe. I'm going to jump right into my screens here, baby. Let's get it. FOMC. Guys, this is big tomorrow. So what happened today? We had the inflation report. This is the CPI report. So we like to look at what's called the year-over-year number. So this is basically inflation. Inflation last time came out at 7.7%. That is already extremely high. And then today we came out with 7.1%. This is big. The market was expecting 7.3 and we got 7.1. That is huge. Good signs for the markets. It means inflation's coming down, so the Federal Reserve can start easing a little bit at their policy here, and we'll talk more about that. Let's talk about the numbers that we saw today. And like I said, prior 7.7, consensus was 7.3, and then actual was 7.1. This is big, guys. The market loves to see this, and that explains the big reaction we saw pre-market. Now today, we started to calm down a little bit, and we'll talk about that when we get to the charts. But really what I want to focus on is tomorrow. So the FOMC meeting, and it's a 2-day meeting with the Federal Reserve, right? So the Federal Open Market Committee, again, this is kind of pretty much all the head chairs at the Federal Reserve. They're making a decision on how to kind of calm down inflation. How they do this is they hike interest rates, okay? That's why interest rates are getting more higher, right? If you try to take out a mortgage loan, or really any loan right now, auto loan, mortgage loan, the rates are a lot higher than they were a couple months ago or even a year ago. The main reason is the Federal Reserve, they're trying to discourage spending. They don't want you and me spending money, and the main reason is they're trying to drive down inflation. Let's talk about today's headline. So the Fed has to portray itself as tough on inflation even as it pushes through a smaller rate hike. So tomorrow we're expecting a rate hike. This is coming at 2 p.m. Eastern time. Guys, mark this on your calendar. This is very important. Please listen to me. The main reason is because at this time there's going to be a lot of volatility. I guarantee you, whatever stock you're watching at this time in the day, it is going to have a big price movement. It's either going to go up or down. It'll probably do both, but you need to really be careful here. Set an alarm, do what you have to do. This will actually be 1 p.m. Central for me because I am in Central time, but I'm watching this close. Now, last time we had a 75 basis point hike, okay? So the last, I believe, 4 meetings, they've done a 75, which is pretty aggressive. It's the highest they've done in the most recent years, actually. So 50 basis points is expected for this one. And it's getting interesting because the inflation report came out better than expected. So maybe they don't rate hike as much, but I think either way, they're going to cover 50. Now, going back to this article here, let's go through it. The Federal Reserve is expected to raise interest rates by a 0.5 percentage point. So that's the 50 basis point. Wednesday, yet signal it will continue its battle against inflation. Economists expect Fed Chair Jay Powell, or Jerome Powell, we call him Jay Powell, to tilt towards the hawkish side in an effort to impress on markets that the central bank is not ready to give up its rate hiking stance. So quick background, you're going to hear the terms hawkish and dovish pretty often here, okay? What hawkish means is the Federal Reserve is aggressive, right? They want to be aggressive in their approach in hiking rates and things like that. So that means they're really trying to drive down inflation. So they've been hawkish all year. Now, dovish means, kind of the opposite. They'll actually pull off this rate. Now, there's a key thing the market is looking for in the next few weeks or months, and this is called a Fed pivot. So what the Fed plans on doing, they're going to hike these rates to a certain level, and then they're going to let it sit there and kind of let it saturate in the markets, wait for inflation to really calm down, and then once it calms down, they're going to conduct a pivot, and that's where they'll actually be pulling back, right? So they'll be deducting basis points from the rate instead of hiking it. Okay, so pay attention to this. This is big. All right, baby, now we got that done. Let's dive into the technical analysis here. So we talked about the fundamental analysis. A few things real quick. If we do see the basis hike that we want, the 50, right? Jay Powell comes out tomorrow, 2 p.m. Eastern. He says we're doing 50 again. The market should respect that very well, okay? And then also the market's looking for Jay Powell's tone, right? They literally want to hear how he sounds about the situation, how hawkish he is, how's he feeling for the outlook since this read came in so good on inflation. So they really want to hear from him. Very powerful man in terms of what he even has to say. He can literally move the stock market in one word. So pay attention to that tomorrow. And if you guys are interested, I do encourage watching the stream if you can, just so you can learn a little bit more about, the bigger part of the stock market, the macroeconomics. Let's dive into the technical analysis here. So we got the fundamental down. Let's do the technical. So here is ES1. This is the S&P 500. Now, we've been talking about in all my previous videos here. If you've been sticking along with the channel, if you haven't, you better hit that subscribe, man, because you're missing out on some value. We have this line here, this trend line we've been holding down this entire year since the S&P 500 hit all-time highs at about 4,800. We've been holding this line all year until today, perhaps. Now this morning we came in with that phenomenal inflation report, and you can actually see price actually flashed above this line here, baby. It wants it. I think it does. We got to be careful, because even just looking at this from a raw candlestick standpoint, this kind of looks like an inverted hammer, which is typically a reversal candlestick pattern. So be careful, right? When you see a tall wake up here, that typically signals that there was a strong rejection of higher prices. So we got up against that trend line. We flashed above it. I think that's pretty exciting. That's better than nothing. It's kind of like a tease, because if you look at all the prior times that it respected this trend line, I mean, it hit it on the money. I mean, there was no forgiveness there. It hit it and then it plopped right back down and continued its path where it belonged. But if you look at it now, man, it flashed above it, man. It wants it. It wants it, baby. Okay, let's dive into today and talk about, why we had a sell-off today. So this is on the 5-minute chart for the S&P 500, and you can see today, right, this is pre-market over here. So that report came out, the market absolutely, it launched, right? It shot up like 3%, which, guys, that's huge for the S&P 500, but it shot up 3%. And then opening bell came and it sold off the entire rest of the day. Now let me explain why this happened. Basically, it's kind of basic supply and demand, right? The market, it pushed up so hard so quickly that you typically want to see that move reciprocated or respected, right? So a lot of this is profit taking, cooling down. It's really hard for you to launch that hard and then keep launching even harder. So I think people who are newer to trading, they kind of expected this to keep rallying all day. But honestly, I expected this to cool down today. It made a lot of sense, and it did exactly as such. And if you want to follow along, guys, with trade signals and things like that, I highly encourage you to check out our private Discord link down below in the description there. We will show you guys our strategies and show you how we banked today as a group, man. We had P&Ls all over this thing. I'll pop them up all over the screen here. Hopefully that encourages you. Not trying to plug too much here, but I just want to offer that opportunity. So S&P 500, man, it looks good today. We shot up strong and then we sold off. So let's talk about kind of the future outlook here. So it's a little interesting, right? I'm not going to try to speculate too much. All I'm going to say to you is, right, guys, we've been uptrending here since about middle of October. I think about October 14th is when we started to see that pivot. Yeah, October 13th, we saw that pivot here, and we've just been uptrending in this channel all the way up to this long-term trend line here, and we tapped it, baby, and we flashed right above it. So I'm pretty excited here. I think there's strong momentum here. Another thing we can look at is the volume as well. Real quick, if we come down below here, look at the influx in volume here, and you also see it staircasing up here the last few days. That is a good sign. If price is pushing up and the volume is staircasing, that is a really good sign, guys. And as you can see, guys, the market is getting really exciting here. And if you want to follow along with overall market news and some of your favorite stocks, be sure to leave me a subscribe, baby. Leave that like and check out our private Discord down below if you're interested in learning more. I'll catch you guys in the next video.